What if I told you that the reason you're still losing money, even though you've read all the books, watched the tutorials, and can call out candlestick patterns in your sleep, has nothing to do with your strategy? You've done the backtesting. You've got the tools. You even have a detailed trading plan that looks perfect on paper. And yet, every time you're in a trade, something shifts. You hesitate. You cut your winner short. You hold your loser too long. You overtrade. You revenge trade. Sound familiar? The issue isn't your system. The issue is you. More specifically, it's the version of you that shows up when there's real money on the line. This is where Mark Douglas begins to open your eyes in trading in the zone. He doesn't waste your time with technical analysis or setups. He targets the root of every trader's inconsistency, your inability to think in probabilities and detach emotionally from outcomes. You think your next trade has to work, and when it doesn't, you're disappointed or angry. That disappointment stacks over time and morphs into hesitation, fear, and irrational behavior. It's not the trade that's wrong, it's your expectation of it. Douglas argues that until you truly accept that every trade is just one of many in a statistical series, you will always be vulnerable to emotional sabotage. Here's the brutal truth. Knowing what to do and doing it are two different skills. You've probably experienced this. You say, I'll wait for confirmation, but then you jump in early. You promise yourself you'll take your stop loss, but when the price hits it, you freeze. Why? Because you're not trading the market, you're trading your past. That hesitation is a scar from your last big loss. That fear? It's the memory of how it felt to be wrong. Your trading brain, as Douglas explains, is hardwired by years of life experience where being wrong had consequences, social, emotional, even physical. And now your brain thinks every losing trade is a personal failure. But trading doesn't work like that. In real life, being right gives you rewards. In trading, you can be right and still lose money, or be wrong and still make money. That's the paradox. The market doesn't care about your analysis, your ego, or your feelings. It just moves. And until you train your mind to operate under a new set of rules, you'll keep fighting the market instead of flowing with it. Douglas calls this shift the journey from the analytical trader to the disciplined trader. The analytical trader thinks more information leads to more control. The disciplined trader knows that control doesn't come from prediction, it comes from acceptance. You don't need to be right, you need to be aligned. This is the first and hardest truth you'll have to swallow. The knowledge you have isn't enough, because if it were, you'd already be winning. Your results don't reflect what you know, they reflect what you believe deep down, often unconsciously. And most traders believe that their knowledge can protect them from losses. It can't. Losses are not just inevitable, they are essential. Each trade is a roll of the dice within a system that over time can be profitable, but only if you stick to it with unwavering consistency. Douglas calls this thinking in probabilities, and you can't just understand it intellectually. You must believe it so deeply that it shows up in your behavior without hesitation. So ask yourself, do you take every trade your plan tells you to take? Do you cut your losses the moment your stop is hit? Every single time? Do you stay neutral whether your last trade was a win or a loss? If not, then welcome to the gap between knowledge and behavior. That's where most traders stay stuck. That's where you've been losing. Not because you don't know enough, but because you haven't yet become the person who can apply what you know, flawlessly and without fear. This is the war Douglas invites you into. Not with the market, but within yourself. You're not here to outsmart the chart. You're here to overcome your own impulses, to retrain your perception of risk, and to redefine what it means to win. And the first step is admitting that your losses aren't anomalies. They're symptoms. They're signals pointing to the mental patterns you haven't yet rewired. So you've read the books, watched the courses, drawn the trend lines. Now ask yourself, who are you when the market opens? You've spent your entire life being rewarded for being right. In school, the more correct answers you gave, the higher your grade. In your job, being right means you're competent, dependable, smart. In your relationships, being right means control, validation, and safety. So when you step into trading, your mind brings that same framework with it. If you're right, you'll make money. If you're wrong, you've failed. And yet, trading flips that rule book upside down. Because in trading, being right doesn't guarantee profit, and being wrong doesn't always lead to loss. That's not just counterintuitive, it's emotionally threatening. It challenges your identity. Mark Douglas drills this in with clarity that stings. You're not here to be right, you're here to execute. Your job is not to predict, it's to consistently act on your edge, knowing that over a series of trades, probabilities will take care of the outcome. But that feels like giving up control, doesn't it? That's because you've tied your emotional identity to being correct. Every time a trade goes against you, you interpret it as a personal failure. You blame the market, the news, or worse. You start questioning your entire strategy. You become reactive, emotional, destabilized. And that's exactly when you lose your edge, not because your system broke down, but because your identity did. Let's be honest. How many times have you gotten out too early because you didn't trust your setup would work? Or added more size out of frustration, trying to make it back? Those aren't technical mistakes. They're emotional ones. And they all stem from one deep-seated belief that you can control the market by sheer will, intelligence, or vigilance. But you can't. The market is infinite, unpredictable, and neutral. It doesn't care how hard you worked on your analysis. It owes you nothing. The moment you accept that, paradoxically, is when you start to gain real control, not over the market, but over yourself. Freedom in trading doesn't come from more certainty. It comes from finally letting go of the need for certainty. That's the mindset shift Douglas demands. Imagine how light you'd feel if you placed a trade and no longer felt the emotional pull to make it work. You'd execute, observe, and move on. That's how professionals think. They don't get attached to outcomes because they don't expect each trade to work. They trust that over time, the math will favor them as long as they stick to the process. And this isn't theory. This is observable in real trading. Just watch how veteran traders speak. They say things like, "It was just one of those trades," or "I executed it well, but it didn't go." They don't obsess over being wrong. They don't spiral into revenge trading. Why? Because their identity isn't tied to the last candle, and neither should yours be. Your identity needs to shift from being a smart trader to being a consistent executor. You stop asking, "Was I right?" and start asking, "Did I follow my process?" Because the market doesn't reward intelligence, it rewards discipline. Douglas exposes the illusion that traps most retail traders. The belief that if you just analyze better, you'll win more. But more analysis doesn't give you control, it gives you noise. Real control comes from emotional detachment and a deep trust in probabilities. When you let go of being right, you gain something far more valuable: consistency. And consistency is the only path to profitability. So next time you find yourself thinking, "I hope this trade works," stop. That hope is a sign that you're seeking control over something you never had control over to begin with. Instead, focus on what you do control: your entry, your stop, your size, your mindset. That's your power, and that's enough. Have you ever broken your trading plan because of a red candle? Not because it violated your rules, but because it reminded you of that one time you got burned, hard. That one loss that stuck with you, that made your palms sweat the next time a similar pattern emerged. That's not technical analysis. That's trauma. Mark Douglas makes it painfully clear. You are not trading the chart, you're trading your emotional history. Every decision you make is filtered through the lens of your past, whether you realize it or not. You think you're evaluating setups objectively, but really, your nervous system is scanning for anything that resembles past pain. And when it finds a match, it pulls you back. Not to protect your capital, but to protect your ego. This fear shows up in disguise. It doesn't always scream. Sometimes it whispers. It says, "Play it safe." It says, "Wait for more confirmation." It says, "Double check the news again." Fear pretends to be caution, but it's not. It's hesitation bred from unresolved pain. You've been hurt by the market before, so your subconscious does everything it can to protect you, even if it costs you the very opportunity you've been waiting for. Douglas calls this emotional risk. the feeling of vulnerability that arises not from the market's movement, but from your attachment to what that movement might mean about you. You're not afraid of the chart. You're afraid of feeling shame, guilt, or failure again. You see, markets don't create fear. You do. The market is neutral, but your perception of risk is emotional, not factual. Two traders can look at the same chart. One sees opportunity, the other sees danger. What's the difference? Memory. The one who sees opportunity has trained their mind to accept risk without emotional judgment. The other hasn't. And that's the invisible war you're fighting, not against volatility or algorithms, but against your own conditioned fear response. You're not afraid of losing money. You're afraid of what losing says about you. Until you consciously rewire this relationship to risk, you'll keep repeating the same patterns. You'll exit too early when the market moves against you slightly. You'll chase green candles hoping to avoid regret. You'll rationalize every mistake as just being careful, when in fact, you're being driven by fear disguised as logic. The solution, Douglas says, isn't to avoid pain. It's to confront it, to understand that pain in trading doesn't mean you're doing something wrong. Pain is information. Pain tells you where your ego is still in control, where your identity still clings to outcome, and where your past still rules your present. Think about it. Every time you avoid a setup that fits your plan, you reinforce the belief that risk is dangerous. Every time you break your rules to escape discomfort, you train your brain to believe that feelings are more important than process. And over time, this weakens your ability to execute consistently. That's why most traders don't lose because of their system. They lose because they can't handle the emotional pain that comes with uncertainty. And so, they keep looking for a holy grail, a system that always wins, a signal that never fails, a market that doesn't challenge them. But they're not looking for profits. They're looking for emotional safety, and that doesn't exist. But there is no holy grail. There is only you, your plan, and your ability to stay present in the face of discomfort. Trading is not about eliminating fear. It's about rewiring your relationship to it. It's about standing in front of that same red candle, the one that used to paralyze you, and saying, I see you. You're just data. That's the moment you begin to trade from power, not from pain. That's when you shift from being reactive to being deliberate. This work doesn't happen overnight. You can't will yourself into emotional resilience through sheer force. You have to practice exposing yourself to discomfort in controlled doses. Each time you sit through a drawdown without flinching, you build emotional tolerance. Each time you follow your stop instead of moving it in panic, you rewire your brain to associate discipline with safety, not danger. That's the long game Douglas emphasizes. Trading isn't about finding comfort, it's about mastering discomfort. It also means detaching your self-worth from your performance. When you tie your identity to your P&L, every loss feels like rejection, and every win feels like validation. That's toxic. You must become the observer, not the judge. See your actions as patterns to adjust, not proof of your value. When you stop internalizing every result, fear loses its grip. Your execution becomes cleaner. You no longer seek revenge. You no longer freeze at the edge of risk. You become fluid, focused, stable. That is what Douglas means when he says trading is not a business of certainty. It's a business of probabilities managed by emotionally mature minds. The trader who wins over time is not the one who feels the least fear, but the one who knows how to coexist with it without letting it dictate their hands on the keyboard. You don't need to become fearless. You need to become fearless in execution. And that begins by making peace with the fact that discomfort is not a sign of danger. It's a signal that you're exactly where you need to be. You still believe deep down that if you just get good enough, if you just find the right strategy, if you can analyze deeply enough or wait long enough, you'll find a way to eliminate risk. You're chasing certainty. But trading doesn't offer certainty. It offers opportunity. That's the core belief you must rewire. Mark Douglas says it simply but profoundly. The moment you stop expecting certainty and start thinking in probabilities, you unlock consistency. And this belief shift is not cosmetic. It's foundational. It's not about reading different books or using different indicators. It's about changing the way your mind processes market information. Until you see each trade as independent, until you accept randomness as part of the game, you will never be able to execute your edge with the discipline required to become consistently profitable. You were raised in a world that worships correctness. Every test graded you on right versus wrong. Every performance review weighed your ability to avoid mistakes. The moment you step into the market, that conditioning gets shattered because the market doesn't care if you're right or wrong. It only cares if you followed your edge and managed your risk. That's a hard truth to absorb, especially when you're bleeding money and your mind is screaming, if only I had waited, or I knew this would happen. You're not reacting to the trade, you're reacting to your broken expectations. And so you fall back into the trap. You overanalyze, you hesitate, you skip trades, you double check your chart looking for confirmation that doesn't exist. Because what you're really seeking isn't validation, it's control. But control and certainty are not the same. Certainty belongs to prediction. Control belongs to process. When you shift from chasing prediction to embracing process, you take your power back. And this shift is the great divide between amateur and professional thinking. Think about casinos. Every casino in the world knows they can't predict the outcome of any single spin, hand, or roll. But they also know, without doubt, that over a large enough sample size, their edge will play out. So what do? They show up day after day and run the system. The house doesn't panic after one big winner walks away with a jackpot. The house doesn't second guess its model after a rough night. It understands probabilities. It trusts the math. And most importantly, it doesn't think emotionally. It acts systematically. Now imagine applying that mindset to your own trading. What if you treated each trade as a statistical event? What if you truly accepted that losses are baked into the equation, not as punishments, but as part of the cost of doing business? That's what Douglas is drilling into your subconscious. Your edge only has meaning if it's applied consistently over time, not sporadically when you feel safe. And you'll never feel safe until you abandon the illusion that you can avoid pain entirely. You want to be a consistent winner? Then you need to stop evaluating your skill based on individual outcomes. One trade means nothing. One win is not proof that you've mastered the market, just like one loss doesn't mean you're a failure. A consistent mindset judges performance over sequences, not snapshots. You stop obsessing over the result and start refining your execution. You stop reacting and start observing. The moment you make peace with this is the moment trading becomes easier. Not because the market becomes easier, but because your relationship to it does. There's a deep discomfort in embracing probability. It feels like surrender, like you're giving up. But it's not surrender, it's strategy, because the more you try to control the market, the more it controls you. You tighten stops prematurely. You micromanage entries. You miss trades because you're trying to filter out all possible risk. That's not risk management, it's risk avoidance. And risk avoidance is the fastest path to failure. It prevents you from taking the very trades that would make your edge profitable. That's not safety, that's sabotage. Douglas says the greatest traders aren't the smartest, they're the most psychologically aligned. They've accepted that anything can happen. They don't fight the unknown, they price it in. They expect to be surprised. They expect to lose on some trades. They don't need to be right. They just need to execute. Because they know that over hundreds of trades, what matters is not perfection, it's probability. And it's this belief that frees them from fear. Until you rewire that, you'll keep getting trapped. You'll make a profit and feel euphoric, then double your size on the next trade and lose it all. Or you'll hit a string of small losses and spiral into paralysis, skipping every valid setup while your plan quietly rots on paper. You think you're being cautious, but in reality, you're just refusing to embrace the randomness baked into this profession. And unless you internalize that randomness, you'll always be vulnerable to it. The truth is, your need for certainty is rooted in ego. Your ego wants to be right. It wants to feel smart. It wants to feel in control. But ego and performance are enemies. Your ego will convince you to break your rules to prove a point. Your ego will make you hold on to a loser just to avoid admitting you were wrong. But trading doesn't care about your pride. It only rewards process. So if you want to grow, you must kill the part of you that demands certainty. You must become someone who acts without knowing and who executes without needing to feel right. And that kind of mindset isn't born from theory. It's forged in execution. Each time you enter a trade, knowing it could lose and still take it, you get stronger. Each time you follow your plan despite fear, you become more dangerous. Each time you hold a winner instead of panicking, you develop trust, not in the market, but in yourself. This is the hidden gift of probability-based thinking. It removes pressure from any one trade and transfers that energy into long-term discipline. It makes you emotionally unshakable because you're no longer chasing outcomes, you're building patterns. Douglas says it best: you don't need to know what's going to happen next in order to make money. Let that sink in. You don't need to predict, you need to respond. You don't need certainty, you need confidence. You don't need to be right, you need to be present. And once you stop trying to be perfect, you become consistent. And consistency, not certainty, is what separates the professionals from the hopeful. There's a moment in every trader's journey when they discover something that works, a pattern, a setup, a rhythm that, when followed with discipline, consistently produces profit over time. You feel a surge of hope. This could be it. You finally have your edge. But then something strange happens. You don't follow it. Or worse, you follow it for a while, it loses a few times in a row, and you abandon it completely. Not because the edge disappeared, but because your trust in it collapsed. This is the critical breakdown that Mark Douglas forces you to face. You're not losing because you lack knowledge. You're losing because you lack trust. And without trust, your edge is useless. Without trust, you hesitate, you tweak, you skip, you interfere. And every time you do, you dilute the very advantage you spent months or years trying to develop. Trust is the glue that binds behavior to belief. Without trust, you'll never act on what you know. You'll hesitate, override, second guess. You'll wait for confirmation that never comes. You'll distort your own signals, dilute your setups, sabotage your probability. And the worst part is, you'll convince yourself that you're being smart, that you're adapting, that you're managing risk, but you're not. You're avoiding commitment, you're avoiding trust, and without trust, there is no consistency. Douglas explains that your edge is not a guarantee. It's a probabilistic advantage. It's not about being right often. It's about being positioned to profit over a large enough sample size. The edge is math, not magic. It's a statistical tilt in your favor, like the slight edge the casino holds over the gambler. And just like a casino, your success depends not on how you feel in the moment, but on your ability to run the numbers over and over again with absolute discipline. But that discipline only exists when trust does. Without trust, you panic, you flinch, you act emotionally, you bail before the edge has time to manifest, and then you wonder why you're stuck. The problem is, most traders demand evidence before belief. You want to see a string of winners before you trust the setup. You want certainty before you commit. But that's backwards. In trading, belief must come first. You must act as if your edge will work, not because you're naive, but because you understand the nature of probabilities. Trust isn't about blind faith. It's about statistical confidence. It's knowing that even a great edge can lose 5 times in a row and still be valid. That kind of trust isn't built overnight. It's forged through repetition, observation, and pattern recognition. Not just in the charts, but in yourself. Think about what happens when you don't trust your edge. You take trades inconsistently. You reduce your size after a few losses, missing the next winner. You skip valid setups because you're afraid of another red trade. You alter your entries to feel safer, even if it weakens the setup. These behaviors all degrade your performance, not because the edge is broken, but because your belief in it is. And so you never see the edge play out. You short-circuit the math. You sabotage the one thing that could have worked because you didn't trust it long enough to let it do its job. It's not your system that's inconsistent, it's you. And that inconsistency stems from fear, fear of being wrong, fear of losing money, fear of repeating the past. But the antidote to fear is trust, not emotional trust. pattern-based trust, process-based trust. Douglas says that to develop this, you must treat your trading plan like a scientific hypothesis. You test it over time with enough trades to let the law of large numbers reveal its truth. You do not abandon the edge after a few painful losses. You stay with it, like a pilot trusts the instruments during turbulence. Even when it feels wrong, even when your emotions beg you to interfere, you stay the course, because you know the edge isn't broken. Your confidence is. This also means redefining what a good trade is. Most traders call a trade good if it made money, bad if it lost. That's flawed thinking. A good trade is one that followed your plan, regardless of the result. A bad trade is one that broke your rules, even if it won. When you begin to evaluate your trades this way, something shifts. You start judging your performance on execution, not outcome. And this is how trust is built. Not through hope or emotion, but through evidence that you can follow through, even when it's hard. Over time, this trust becomes internalized. You don't need to feel confident. You act confidently because you've trained yourself to do so. Your execution becomes automatic, not forced. You no longer flinch when a trade moves against you. You no longer get euphoric when it moves in your favor. You've become neutral. And in that neutrality, you find power. Not because you're detached from the market, but because you're connected to your process. That's real trust. That's the kind of trust that can carry you through any market condition. So ask yourself honestly, do you trust your edge? Do you trust it enough to take every trade it signals, even after a string of losses? Do you trust it enough to stay consistent, even when fear whispers in your ear? If not, you don't have an edge. You have a theory. And theories don't make you money. Execution does. Trust turns theory into reality. Trust is the bridge between knowing and doing. And how do you cultivate that trust? By repetition, by journaling, by tracking every trade, win or lose, by reviewing your stats and proving to yourself that the edge exists, not just in theory, but in your own execution. You build trust by building a body of evidence, brick by brick, trade by trade. And over time, that trust becomes your foundation. It steadies your hand in drawdowns. It keeps your sizing rational. It gives you the courage to press your edge when the moment is right. You stop chasing. You stop hoping. You start operating like a professional. That's when you realize trading is not about finding the next best system. It's about becoming the kind of person who can follow through on a good one. And that person is built on trust, not just in your tools, but in your ability to apply them. Douglas knew this well. That's why he said, when you really believe that trading is just a probability game, concepts like right and wrong or win and lose no longer have the same significance. Because when you trust your edge, you stop needing to win. You start focusing on execution, and that's when the winning begins. You say you want to be consistent, but your behavior is anything but. You wake up some days full of discipline, others full of doubt. You take perfect trades on Monday and go rogue by Thursday. You think consistency is about finding the perfect setup. It's not. It's about becoming the kind of person who behaves the same way under pressure, regardless of the outcome. That's what Mark Douglas calls a mental framework of consistency. A structure inside your mind that produces steady actions, regardless of how the market makes you feel. And until you build that internal architecture, your results will always reflect your mood, not your method. The truth is that most traders fail not because they don't know what to do, but because they don't do it consistently. They tweak their approach based on how they feel, not based on what their plan says. One loss and they become risk averse. One win and they become reckless. This emotional roller coaster is the exact opposite of what's required to succeed in a probabilistic environment. Douglas explains that consistency isn't just a goal, it's a skill, and like any skill, it must be trained. And to train consistency, you need structure. You need a repeatable routine. You need rules that define your actions so clearly that emotion can't override them. That's why professionals trade from checklists, not from gut feelings. They know that consistency isn't born from confidence, it's born from commitment to process. You don't show up and ask, do I feel ready today? You show up and execute, because readiness is irrelevant. Your job is not to feel your way through the market. Your job is to become a machine of flawless execution within a world of chaos. This level of structure may sound robotic, but that's the point. The market is chaos. Your role is to be the constant, to be the one thing that doesn't flinch, doesn't sway, doesn't improvise based on emotion. You are the operator of a system, and your ability to stick to that system is what builds your edge over time. Douglas makes it clear. If you change how you behave based on how a trade ends, you are not yet consistent. And until you become consistent, you'll never be profitable, not sustainably, not over the long run. But how do you create this framework? It starts with brutal honesty. You must identify your emotional triggers. What throws you off? Is it a losing streak? A win that makes you overconfident? The fear of missing out? You must know these things cold. Then you must design pre-trade and post-trade rituals to stabilize yourself. Meditation, journaling, trade review. These aren't luxuries. They're necessities because your mind, untrained, is your biggest liability. And the market has no mercy for undisciplined minds. It will find your weakness and exploit it with ruthless efficiency. You also need rules for when not to trade. That's just as important. Most traders think in terms of entries and exits, but real consistency is shaped during the off-switch moments, when you're tempted to chase, to force, to overtrade. Your rules need to protect you from yourself. That's what discipline is. It's not restriction, it's protection. From fear, from greed, from ego. A solid framework prevents you from needing to rely on willpower. It makes discipline automatic. And when discipline is automatic, your energy is freed up to focus on execution, not emotion. Douglas points out that a consistent mindset sees each trade not as a chance to win, but as a chance to execute. That's the shift. When your focus is no longer on the money, but on the behavior, your trading transforms. You stop needing every trade to work. You stop reacting to every P&L fluctuation. You become process-driven. You become emotionally grounded. You create space between stimulus and response. That space is your power. That space is where the professional lives. This is why journaling matters. Not just writing what you traded, but why you did it, how you felt, whether you followed your process. Your journal is your mirror. It shows you whether you're consistent or just lucky, and it gives you the raw data to identify where your framework cracks under pressure. Every missed trade, every impulsive entry, every deviation is a clue, a thread to follow. And if you pull it far enough, you'll uncover the belief that sabotaged your consistency. Because behind every pattern of inconsistency lies a story, and that story must be rewritten if you want to evolve. You must come to understand that real consistency is boring, it's repetitive, it lacks drama, it doesn't spike your adrenaline, it doesn't impress your friends, but it builds your account, quietly, relentlessly. That's the work most traders avoid because they're addicted to excitement, not success. They don't want a business, they want a thrill. And the market punishes that. But if you build your framework, if you commit to it day after day, regardless of whether you win or lose, you gain something that almost no trader ever experiences: emotional stability. That something is trust. Not just trust in your system, trust in yourself. The kind of deep self-respect that comes from knowing you can rely on your own behavior when it matters most. When the market is moving fast, when your equity curve dips, when the setup feels shaky, that trust is earned, not given. It's built through daily repetition of behavior that reflects your highest trading principles. That's what Douglas means when he says you must train your mind to think in probabilities. Because when you do, your trading becomes less about the outcome and more about maintaining internal alignment. You are not here to trade for the thrill. You are here to trade for freedom. And freedom only comes when your actions are consistent enough to generate reliable results. That reliability isn't built in the heat of the moment. It's built in the hours before and after the trade. It's built in reflection, in routines, in discipline, in commitment. This is your mental framework. This is your edge. And when it's strong enough, no market condition, no losing streak, no moment of doubt can shake you from it. This is where real traders are made, not in the wins, but in the structure that surrounds them. You think you're making logical decisions, but you're not. You think you're being rational, but you're being ruled by beliefs you don't even know you have. That's the hidden battlefield Mark Douglas pulls you into, the unconscious mind. Because trading isn't just a technical process, it's a psychological one. And if you don't uncover the hidden beliefs shaping your behavior, no amount of strategy will save you. Every time you click buy or sell, you're not just acting on analysis, you're acting on a subconscious story you've been telling yourself for years. A story about what it means to win, about what it means to lose, about what it means to be wrong. And that story, unless rewritten, will sabotage you. Most traders operate on unexamined mental scripts. Some are rooted in childhood, others in cultural conditioning, past trauma, or previous market experiences. You may believe deep down that losing is failure, or that you're only good enough if you're making money, or that risk is dangerous and should be avoided. These beliefs don't scream, they whisper. They show up in hesitation, in rule breaking, in revenge trades, in overtrading, in fear of missing out. And because they operate beneath your conscious awareness, they feel like truth. But they're not truth, they're patterns. And patterns can be changed. That's why changing your behavior isn't just about willpower, it's about reprogramming. Douglas explains that your mind has to be rewired, just like a faulty system. And that rewiring starts with awareness. Until you make the unconscious conscious, it will control you, and you'll call it fate. The key is to begin observing yourself without judgment. Start tracking not just your trades, but your thoughts, your feelings, your micro reactions. Every deviation from your plan is a breadcrumb. Follow it. What were you thinking? What emotion were you feeling? What belief drove that behavior? You must become a detective of your own mind. The truth is, your current beliefs were not chosen. They were inherited, and many of them are incompatible with trading success. For example, if you were raised to avoid mistakes, you'll avoid taking trades. If you associate being wrong with shame, you'll cling to losers. If you equate success with always being right, you'll sabotage yourself every time you encounter randomness. Trading punishes these beliefs ruthlessly. That's why your job isn't just to manage risk on the chart, it's to manage risk within your own operating system. Until you change the source code, the bugs will keep showing up. The most dangerous belief is the one you don't know you have. That's the belief that quietly undermines your edge, that whispers that you need to make it back, that urges you to size up too fast after a win, that justifies skipping a trade because something feels off. But feeling is not fact. Emotion is not data. Until you separate the two, you will always be vulnerable to the invisible hand of unconscious belief. Douglas urges you to treat your mind like a trading system. Test it, question it, refine it. Because if you don't, it will continue to trade you more than you trade the market. This inner excavation is uncomfortable. You'll uncover ego, insecurity, fear, pride. You'll realize how often you've traded to feel smart rather than to follow your process. You'll see how much your need for validation has cost you. But you'll also find clarity. Once you see the belief, you can question it. Once you question it, you can rewrite it. And that's where transformation begins, not in knowledge, but in belief engineering. Trading becomes less about the chart and more about internal alignment. Consider this. Your trading plan is only as strong as the beliefs that enforce it. You can write the most logical, data-driven system in the world, but if your beliefs don't support disciplined execution, that plan is worthless. It will sit in a drawer while you continue to react to fear, greed, and self-doubt. Douglas says that professional traders are not better analysts, they are better believers. They've trained their minds to align with the demands of the game. They believe in randomness. They believe in probability. They believe that execution is king. And those beliefs drive behavior, and behavior, not knowledge, drives results. And this belief alignment doesn't happen through force. It happens through repetition, through conscious reflection, through exposure to uncertainty, and learning to sit with discomfort. You don't overcome your old beliefs by arguing with them. You override them by behaving in ways that contradict them, over and over, until the new pattern becomes dominant. This is not mental fluff. This is how the brain works. Neural pathways are built by action, not intention. You must act as if you are a consistent trader, even before you feel like one. That's how you become one. That's why Douglas emphasizes the importance of personal responsibility. You are not the victim of the market. You are the operator of your own system. If your behavior breaks down, it's not the market's fault. It's your belief system showing cracks. And that's not a cause for shame. That's a signal, a roadmap, a prompt for reflection and growth. The trader who understands this becomes emotionally invincible because they no longer waste energy blaming external forces. They turn inward. They own every outcome. And from that ownership, they build control. You want consistent profits? Then build a consistent mind. And a consistent mind is one that no longer reacts to the ghosts of past trades, past mistakes, past beliefs. It's a mind rooted in awareness, in presence, in discipline. That kind of mind doesn't emerge by accident. It's built with intention. You must become a student of your own psychology. Study your habits, track your thoughts, catch yourself in the act of sabotage and pause. Not to punish, but to observe. That pause is where the rewiring begins. That's where you interrupt the pattern and lay the groundwork for something better. This is the level Douglas is calling you to rise to. Not just better trades, but better beliefs. A better mind, a quieter ego, a sharper awareness. Because the greatest system in the world will fail in the hands of a reactive mind. But even an average system can produce extraordinary results when paired with inner alignment. That's your real edge, not what's on the chart, but what's in your mind when you read it. And if you want to grow, you must go inward. You must ask yourself the hard questions. You must build not just a trader, but a consciousness capable of consistent, empowered execution. There's a reason Mark Douglas dedicates an entire section to the 5 fundamental truths of trading. These are not suggestions. They're not motivational quotes or philosophical musings. They're operational principles, mental software updates designed to align your psychology with the reality of the market. Because unless you internalize these truths, your behavior will always contradict your intentions. You'll say you're disciplined, but you'll break your rules. You'll say you accept risk, but you'll panic when the chart turns red. You'll claim to be process-driven, but you'll still chase outcomes. And all of this stems from a mindset that hasn't yet absorbed the structure of these truths. The first truth: anything can happen. It sounds simple, almost dismissive, but it's the cornerstone of every professional trader's mindset. Because the moment you think something can't happen, you expose yourself to disaster. You drop your guard, you over-leverage, you assume. And assumptions in the market are landmines. Accepting that anything can happen doesn't mean trading without structure. It means operating with humility. It means recognizing that no setup, no matter how clean, is immune to randomness. This truth gives you psychological flexibility. It reminds you that no matter how perfect the chart, the outcome is always uncertain. And that awareness keeps you sharp, cautious, and alert. The second truth: you don't need to know what's going to happen next in order to make money. This truth is the antidote to analysis paralysis. Most traders think their job is to predict. They obsess over forecasts, signals, news events. But your real job is to manage risk, follow your edge, and execute flawlessly, regardless of whether you know what comes next. Prediction is ego. Execution is professionalism. Douglas emphasizes that the best traders are not the best predictors. They are the best executors. They know how to manage their mind through uncertainty. They know how to act without needing to know. They trust their edge, not their ego. The third truth: there is a random distribution between wins and losses for any given set of variables that define an edge. This is where most traders stumble. They expect consistency in outcomes, not in behavior. They take 5 trades and expect a neat pattern: win, win, loss, win, win. But randomness doesn't work like that. You can lose 5 times in a row with a perfectly valid edge. And unless you understand this, you'll abandon your system at the first sign of pain. Douglas makes it clear. Your edge plays out over a large sample size, not 5 or 10 trades. You must zoom out. Think like a casino. Casinos win because they know the math, not because they win every hand. The fourth truth: an edge is nothing more than an indication of a higher probability of one thing happening over another. It's not a guarantee. It's not a magic formula. It's a probability skew. And unless you treat it as such, you'll attach too much importance to each trade. You'll believe a win means you're right and a loss means something is broken. But the market doesn't reward certainty, it rewards consistency. When you treat your edge like a probabilistic tool, not a prediction machine, you free yourself from the emotional swings of single outcomes. You focus on process. You stop overanalyzing. You stay consistent. The fifth and final truth: every moment in the market is unique. This is the truth most traders resist because it kills the illusion of control. You want to believe that what worked yesterday will work today, that this pattern guarantees that result. But the market is never identical. Every moment contains different participants, different order flow, different catalysts. And if you treat it like a repeatable formula, you blind yourself to nuance. You begin to project instead of perceive. This truth demands presence. It demands humility. It demands that you approach each trade with fresh eyes and an open mind. Douglas doesn't just list these truths to sound wise. He builds them into the foundation of his entire approach, because once you internalize them, everything changes. You stop judging yourself by individual outcomes. You stop needing to be right. You start thinking like a casino. You start focusing on execution. You become emotionally untouchable. Not because you don't feel, but because you no longer attach meaning to randomness. You understand that your job is to take your edge, apply it, and move on. But here's the catch: these truths must be believed, not just understood. Knowing them intellectually is useless. If you can recite them but still panic on a red candle, you haven't internalized them. Douglas says real transformation happens when your behavior reflects these truths automatically. When you act in alignment without having to remind yourself, when the truths become unconscious. That's when trading becomes effortless. Not because it's easy, but because you're no longer fighting yourself on every click. So how do you internalize them? Repetition, exposure, journaling. Every time you experience a random loss and don't flinch, you reinforce truth 3. Every time you take a trade without knowing what happens next, you reinforce truth 2. Every time you stop looking for perfect patterns and focus on your process, you reinforce truth 4. The mind learns through emotional repetition, through reflection and reinforcement. This is not theory. It's how belief systems are formed and rebuilt. You'll know you've internalized these truths when your emotional spikes disappear, when a string of losses doesn't derail you, when a string of wins doesn't inflate you, when you stop needing the market to do anything other than give you the next opportunity to execute your edge. That's real freedom. Not from losing, but from the psychological torment of needing every trade to go your way. That's what Douglas is giving you: the architecture of a mindset that doesn't crack under randomness. These 5 truths are not just principles, they are psychological armor. They protect you from false expectations, from emotional sabotage, from ego-based decisions. And like armor, they must be worn consistently, every day, in every trade. You don't outgrow them, you grow into them. Deeper, sharper, stronger. And when you do, trading stops being a battlefield. It becomes a field of execution. The chaos doesn't disappear, but your relationship to it does. You stop reacting. You start responding. You start trading like a pro. You say you accept risk, but you don't. You say you understand probabilities, but your behavior tells a different story. Because if you really understood what it means to think in probabilities, you wouldn't flinch at a string of losses. You wouldn't celebrate a random win like it means you've mastered the market. You wouldn't chase after trades because you're due for a green day. Mark Douglas calls this the trader's identity crisis, a deep psychological misalignment between how traders think they see the market and how they actually respond to it emotionally. And this misalignment isn't just costly, it's fatal to consistency. This is why Douglas hammers the idea that thinking in probabilities is not natural. Your brain wasn't designed to handle randomness with composure. It craves patterns. It craves certainty. It creates stories, illusions of causality, to protect you from the terror of the unknown. And trading? Trading is nothing but unknowns wrapped in the disguise of technical patterns. You might believe you're being logical, but your brain is constantly lying to you, trying to find comfort where there is only risk. To become consistent, you must train your brain to think probabilistically, not just intellectually, but emotionally. You must learn to detach your identity from outcomes. You must stop assigning meaning to single trades. When a casino loses a hand, it doesn't question its edge. When you lose a trade, you spiral into self-doubt. That's the difference. And it's because you still believe each trade says something about your skill, your worth, your future. But no trade means anything by itself. It's one iteration of a long-term process. Nothing more, nothing less. Douglas argues that the root of this identity crisis is the need for control. You've been raised to associate certainty with safety. In school, in work, in life, knowing the right answer means winning. Making mistakes means punishment. But the market doesn't play by those rules. In the market, mistakes are inevitable. Randomness is guaranteed. And if your self-worth is tied to being right, the market will break you. You'll never allow yourself to execute freely, and because every trade will feel like a test, and the fear of being wrong will paralyze you. So how do you detach? By building a new identity, not as a winner, not as a loser, but as a professional executor of edge. You stop asking, was I right? And start asking, did I follow my process? You stop evaluating your value based on P&L and start measuring consistency. This isn't just semantics. It's a full reframe of how you define success. Success is not winning, it's executing with integrity. Success is not being right, it's showing up, placing the trade, honoring the stop, and moving on. No drama, no ego, just precision. This detachment isn't apathy, it's discipline, it's clarity, it's the space between stimulus and response. The psychological breathing room that allows you to act with control, not compulsion. And once that detachment is in place, you become dangerous in the best way. You become consistent. You stop bleeding emotional capital. You become the kind of trader that institutions build around because your value is no longer tied to outcomes. It's tied to repeatable behavior. That's how you build trust with yourself, with your edge, with the process. And it's not a one-time switch. It's a practice. You'll be tempted to tie your mood to your results. You'll feel the urge to deviate just this once. You'll want to fight the market when it hurts you. But each time you resist that urge, you build mental muscle. Each time you act in alignment with your process, even when it's painful, you reinforce the identity of a consistent trader. This is how real confidence is built, not by winning, but by behaving. Douglas insists that real freedom in trading comes only after this shift. When you truly understand probabilities, you no longer need the market to make you feel good. You no longer need to win today. You just need to play your edge. And if it plays out, great. If it doesn't, no problem. You don't spiral. You don't overcorrect. You remain still. You remain centered because you are no longer trading for emotional payoff. You're trading for executional integrity. There is a moment when all the lessons finally click. Not because you've read them 100 times, but because something inside you shifts. You place a trade, not with fear, not with hope, but with clarity. You set your stop not as a form of protection, but as a statement of integrity. You no longer see losses as failures or wins as validation. You're just there, doing the work, calmly, deliberately, like a surgeon with a scalpel. This is what it feels like to become the consistent trader. And for Mark Douglas, this transformation is the entire point. Not just being profitable, but being centered, unshakable, and in control of your execution regardless of outcomes. Consistency isn't a result, it's an identity. Douglas is emphatic about this. You don't get consistency, you become it. You build it from the inside out, trade by trade, decision by decision. Every time you follow your plan instead of your impulse, you reinforce that identity. Every time you sit through discomfort without flinching, you remind yourself who you are. You're not chasing profits. You're becoming the kind of person who trades without being emotionally compromised. That's the prize. That's the win worth fighting for. But here's what no one tells you. Becoming consistent means giving up a lot. It means letting go of the thrill. It means releasing the need to be right. It means surrendering your ego's desire to be impressive, to show off wins, to get that dopamine rush when you nail the bottom tick. Consistency is boring. That's why it's rare. It's not sexy. It doesn't sell on social media. But it works. And Douglas makes it very clear. If you want consistency in results, you must first become emotionally consistent in behavior. That means process over excitement, rules over revenge, stability over stimulation. It's also why Douglas places such emphasis on beliefs, because beliefs are the blueprint. Every action you take flows from them. If you believe trading is about being right, you'll fear being wrong. If you believe the market owes you something, you'll force outcomes. But if you believe your job is to execute your edge and manage risk, you'll be free. Your beliefs shape your emotional responses. Your emotions shape your behavior. Your behavior determines your results. You want different results? You need different beliefs. That's the formula. There's no shortcut around it. So take a good look at your current beliefs. Where do they come from? Are they useful? Are they true? Douglas would challenge you to tear them down and rebuild from scratch. Not as a trader who wins, but as a trader who executes, who thinks in probabilities, who does not flinch in the face of randomness, who holds self-trust in higher regard than market predictions. That's how you become unshakable, not through strategy, through structure, mental structure. And here's the paradox. The more detached you are, the more control you gain, not over the market, but over yourself. And that's the only control that matters. You stop reacting, you stop chasing, you stop fearing, you start trading cleanly, efficiently, quietly. No drama, no noise, just a professional at work, cutting through chaos like a blade through fog. And the market? The market starts to reflect that clarity because your results are always a mirror of your mind. Consistency outside only comes from consistency within. Douglas isn't trying to sell you a dream. He's trying to sell you discipline, not in the form of rules, but in the form of identity. He wants you to see that the market is not your opponent, it's your mirror. That every impulse, every fear, every craving that arises while trading is a message. And if you're brave enough to listen to those messages without reacting, you evolve, you grow, you transcend. That's the real edge, not RSI, not MACD, not order flow. The real edge is the self who executes, in spite of noise, in spite of fear, in spite of temptation. This is the final transformation. When you become the consistent, unshakable trader, you're not just trading anymore. You're embodying a principle. You are the edge. You are the system. You no longer need to find certainty in charts because you've found it in your mindset. And that certainty gives you peace, the kind of peace that doesn't swing with the P&L. That doesn't rise and fall with your equity curve. That kind of peace is what Douglas is offering. But you have to earn it, trade by trade, belief by belief, one act of integrity at a time.